Welcome to Thoughts on the Market. I'm Qianlei Fan, Morgan Stanley's Hong Kong-China transportation analyst. Chinese airlines are at a once-in-a-decade inflection point, and today I'll break down the elements of this turnaround story. It's Thursday, February 6th at 10 a.m. in Hong Kong. Last week, hundreds of millions of people across Asia gathered to celebrate the Lunar New Year with their families. I was one of them and took a flight back to my hometown, Nanjing. Airports were jam-packed for days, with air travel expected to exceed 19 million trips. It's all indicative of Chinese airlines making a comeback after a 7-year run of underperformance. In fact, we believe airlines will be one of the first industries to emerge from China's deflationary pressure this year. And this has implications for the country's broader economy. Although COVID impacted airlines globally, other regions have since recovered. In China, the earnings recovery is just beginning. Since 2018, Chinese airlines have experienced the demand hits from the trade tension, currency depreciation, COVID-19, and the post-COVID macro headwinds. It's been 2 years since Chinese borders lifted restrictions, and air travelers are returning in force. Excess capacity has now been digested. Slower deliveries of aircrafts continue to limit supply, and it is more difficult for airlines to get new aircraft and increase their available seats. Passenger load factors will continue to strengthen this year, which means the airlines are running close to full capacity. This will increase airlines' pricing power within the next 6 to 12 months, feeding through to earnings. If we put that in a global context, Chinese airlines industry handled around 700 million passengers in 2024, 8% of global air passengers. But that 700 million passengers only account for half of China's population. In the US, air passenger numbers can be 3 times its population. Chinese airlines have just reached break-even in the past year, while many of their global peers have already generated robust profits. Chinese airlines' earnings and valuation have lagged global peers in both absolute and relative terms. But now, with a turnaround coming into view, Chinese airlines have a longer runway for stronger earnings growth and share price performance than global peers. What's more, the August 2024 turnaround in U.S. airlines offers several key takeaways for China. U.S. airlines share prices recovered last year following a long period of underperformance post-COVID. The wait before the inflection was long, but share prices moved up quickly once the turning point was reached, and the valuation expanded ahead of earnings recovery. Big U.S. airlines outperformed smaller players during the most recent rally. We think all these are relevant to the Chinese airlines story. If we look at earnings, Chinese Big Three airlines reached break-even in 2024, making a small profit in 2025, and that profit will double in 2026. But that's not yet the peak of the cycle. Peak cycle earnings could again double the 2026 level, probably in 2027 to 2028. That's the reason why we think Chinese airlines are on the path to doubling share prices. To sum up, Chinese airlines represent a once-in-a-decade opportunity for investors. With strengthened passenger load factors and a positive demand outlook, coupled with significant potential for earnings growth, this industry looks ready for takeoff. Thanks for listening. If you enjoyed the show, please leave us a review wherever you listen and share Thoughts on the Market with a friend or colleague today. For those who celebrate, 蛇年大吉，恭喜发财.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.